It's been a good year thus far for Bitcoin, but also the Bitcoin miners. In this video, we're going to talk about Riot Platforms, and we're going to go straight to the daily chart. So, um, between April and July, price was range bound, and then it broke out to the downside, which I call a bear trap. You had the resistance support traders that sold only to come to a level where there were enough buyers that overtook the sellers at the daily buyers level at $9.25. Now, what was powerful about this level was that this daily level was nested within a weekly level, a weekly buyers level at 850. So if I go to the weekly chart, you can see how we had a rally in price, a basing candle and a rally out, right? So those are powerful when you have levels nested within levels or levels on top of levels or zones in this case. Nevertheless, price did break out eventually in July and surged higher along with the Bitcoin price. Now Bitcoin has been trading in the tight range, roughly 5,000 between 27 and 32. However, we do see Riot selling off. They did actually announce earnings this past week, and before we figure out how low price can get, let's look at this article. This is coming from Yahoo Finance by way of CoinDesk. This is Bitcoin miner Riot post. Mixed Q2 earnings report sees growing consolidation in industry. All right, so Riot Platforms, one of the largest publicly traded Bitcoin miners, reported mixed earnings in its second quarter earnings released on Wednesday. The miner reported an adjusted earnings per share loss of 17 cents, beating estimates of a loss of 20 cents. But revenue came in at 77 million, short of analysts' estimates of 84 million. Quarterly revenue consisted of $50 million in Bitcoin mining, 7.7 or 8 million from their data center hosting, and 19 million from engineering, whatever that means. All right, Riot's core business is Bitcoin mining, and the scale of our vertical integrated operations and financial strength allowed us to execute on our power strategy at unmatched scale this quarter, driving our average cost to mine to $8,400 per Bitcoin in the second quarter, compared to an average Bitcoin price of 28K. So that's pretty good. We anticipate companies in our industry will consolidate to experience challenges, and that 2023 will continue to be a period of consolidation in the Bitcoin mining industry. And given our relative position, the liquidity and absence of long-term debt, we believe we are positioned in the competitive landscape to benefit from such consolidation. So we've seen during the crypto winter, the previous bull market, miners were buying these rigs left and right on debt. And so when the crypto winter came and Bitcoin prices collapsed, uh, these miners could not pay for the loans that they had taken out to buy the miners. So we saw rigs being sold off, but only the strong will survive. And Riot is one of the strong that will be around during the next bull market, and they'll probably be even stronger this go around. All right, so if we go back to the charts, we're going to go to the daily chart. Before we do that, let's just go to the monthly chart, and big picture. I have a resistance support band on the monthly chart at $24, so that's going to be a huge barrier for price to get through. But going into next year in April, we have the Bitcoin halving. Price should have no problems getting through the $24 level, and at least retest near the previous highs that we saw in 2021. All right, so with that said, we're going to go down to the daily chart, and price has been losing steam and finally broke down. This past week on earnings. Again, earnings was mixed. Now we see the momentum indicators starting to point down. However, price is sitting right above the 50-day moving average at 1450. That's aligned with this pivot high to the left that was established in April. But this is kind of like in no man's land. So I don't anticipate price holding. You may see a bounce, but I think price has the opportunity to pull back even further and retest that origin of the breakout of the range down at $13, $13.50, and that would be a good place to potentially go long. You would have to see the price action if and when price gets down there. I'm looking for like a W pattern on maybe an 8-hour or 4-hour chart, or a green candle on high volume to signify that the bottom is in. It's worth noting also, you see the RSI. It's now below 50. Typically, when the RSI is below 50, you're in a downtrend. Above 50, you're in an uptrend. So, you can look for oversold conditions when price gets down to that 30, or the RSI gets down to the 30 level. That could be also an indication that prices are oversold. But until then, potentially you'll see a bounce at 1450, but it's just going to be a bounce. I like the levels lower in that $13 range. Thanks for watching. Subscribe. Please like the video.